Welcome back to Your Average Investor, everybody. Today we're going to be reviewing the challenge account as well as SPY overall. The market has been just absolutely bonkers the last couple of weeks. And, it's playing out pretty close to what I expected. We came pretty high above this channel, came right back into it, fell just below the channel. Now we're coming maybe back to the bottom of this channel area. But let's first take a look at Children's Place. This is the cash secured put we've been sitting in and rolling for the last couple of months. And it expires in 4 days, but I think I want to roll it again. I don't want to take these yet, so I'm going to see if I can buy this one back and then roll for something around 35, 40 days out again. The difficult thing right now is there's not a lot of volume on these contracts, and so we're going to have to get creative here. I'm thinking if I can get this one filled at 140, that would be awesome. I think I'll probably have to fill it for a little bit less. But right now, that's going to give me 140 if it fills. So let's just see if that fills. It's not going to fill right away, so I'm going to cancel replace. I'm going to take this down to $100 and see if we can fill for $100. And yeah, that's what I thought. I thought we'd probably have a hard time filling this. So we'll play around with the price a little bit, see, maybe we get filled at, let's go down to $80 here. Nothing here at 80. Sometimes when there's really illiquid contracts like this, what you have to do is buy one back and then sell the other separate as opposed to trying to do them both together. But I'm going to go all the way down to $40 on this. I'd be happy to roll this all the way down to $40. If I can get filled for higher than that, that's great. But if not, then we'll see what happens. So let's go down to 40. There it goes. Okay. So we just rolled it out for another month. We made another $40 in premium, which is great. And so total on this trade now, if you've been following along with us and doing this, what we've done is 2 months ago, I sold a cash secured put at this $10 strike. And I believe it was for $110, or I want to say $150, something like that. It was in the money. I didn't want to take it, so I rolled it out, and then I rolled it out again. Now this red line right here, this represented my old break-even line. This is the line that if the price is at this, then it's break-even, 8.08. Now I just made another $40 in premium, which means now I'm going to move this to 768. Actually, we're going to go 769 because of commissions paid. So to be true to that, 769. So this is now moved down to 769. This is the new break-even for the trade, meaning as long as if I get exercised and have to hold the shares, I can sell covered calls at the $8 strike, or even the $8 strike, not quite 7.5, and I would actually make money on that trade overall. Not as much as I was hoping, but it's still working out okay for me. The challenge account overall, we started with $1,000. You can see right now the account positions at just over 1,100, so we're up about 10% if I were just to liquidate everything right now. The big lots trade not doing so hot for us. I think we're down 50% or so. I'm considering doubling down on it. It's interesting. It's kind of it's a double or nothing trade, right? That was what I expected when I first got into big lots at 176. Was this is either going to 3, 4, 5x or it's going to go to 0, and that's why I positioned a pretty small amount. Large for a challenge for the percentage of the account, but considering that it's a challenge account, I put less than 20% of the account into big lots. So I'm going to sit on the sidelines a little bit longer with this. I do have this leap right here that, this is not a leap. This one just expires January of 25. I thought this was January 26. So we'll see if this does anything and resurrects itself. If not, oh well, that part expires worthless, and we move on to the next trade. Now let's talk about the S&P 500 for a little bit. People are kind of going nuts right now in the news and saying, oh, this is the end of the world. It's kind of what happens anytime there's a dip on the S&P 500. It's a pretty silly thing. Maybe the dip keeps dipping, right? Like that's what happened here. We had dip, 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 and then finally some recovery. And you had this dip here, and same thing. People are talking about, oh, the world's ending. We're going to go back to S&P 500 at, 300 a share, 200 a share. And then, of course, it just ripped face for another while and went right back into this channel. Now we broke below the channel, but today, since open at like 510, rally all the way back up to 520. Is this a buying opportunity? Personally, I think if you're looking to trade, and again, this is not investment advice at all or financial advice, you've got to do what's right for your situation. I think there's some interesting opportunities here, though, to go long. I would be skeptical about going long with options because options premium right now is going to be pretty juiced, and so unless you're buying and selling within a single day, so you don't have to have IV crush smack at you, then I would avoid options and just do shares like on companies you've been watching and you want to get a dip buy on. Like one that I'm like really on the fence on, but it's kind of interesting to me right now is Intel. I know they just suspended their dividend and they're at crazy lows right now, but it's like, I mean, the United States is not going to let Intel fall, I don't think. I think it's going to be something that just gets propped up by government money because we need a chip industry that the U.S. can control and not be controlled by like a Chinese-owned company. So I don't think that, and I don't know if it's going to be Intel or something else, but like all these ones that are based in Taiwan, I think government people are looking at going, that's kind of sketchy there. We need to prop this up. So I think Intel's kind of interesting. I've still got my eye on Unity Software. I'm really, really liking this play. I'm thinking this is going to be something really interesting. And I'm actually considering adding more to my GameStop position. Oh, it's not under 20 anymore. It was under 20 this morning. Now it's popped back up to 20 bucks a share. I really like GameStop here with $4 billion in cash and a turnaround story. I'm liking it more and more and more. I've got a few hundred shares already. I might be, and I'm not talking for the challenge account, of course, but for my personal account, I might be adding some more to GameStop. AMC I like less than GameStop, but I do like it as well. And it also seems to be building a nice, really nice base of support right here between $4.50 and $5 a share. So I think this is an accumulation zone, and wait till it rips face to $10 plus. Make a nice 100% gain. If it happens to come back over here, you're going to make multiple 100% gains on it. So I like the asymmetrical risk reward on AMC right now. I think the same on GameStop, though I don't think GameStop's quite as asymmetrical. Meaning I don't like AMC. I think has more downside risk than GameStop, and potentially more upside risk too. I know a lot of people talk about GameStop as if it's going to be the $10,000 a share, $100,000 a share type stock. A lot of people talk that about AMC as well, but the thing is if that happens, like who's going to be paying you? How are you going to get your money, right? Like if GameStop really was $100,000 a share because they short squeezed like Volkswagen or whatever, like I could see it, going to a few $100s a share again in a crazy short squeeze. Like I'm not against that narrative. I think it is manipulated. I think there is a short squeeze. I just don't see $100,000 a share or whatever. These people are talking. So real interesting. You can see. Look at this list of stuff that's dipped. Lots of good stuff on a dip right now. Nvidia. We've talked Nvidia for a while. I was thinking it was pretty toppy up here in the 130s. I didn't take a short position on it, but now we're down here. Came all the way down to $90. Wow, look at that, $90 a share, and then ripped back up to 100 today. So really interesting to see that basically everything today, the dip's getting bought back up. So I like it as an opportunity to get in some names that you've been maybe sitting on. Oh, look at this, Walgreens. Walgreens is another fascinating one to me. They've just had an absolute destruction of share price. Like, look at this. If you're getting Walgreens now, you're getting Walgreens for the same price of 97. So this is like Intel, right? And I know Walgreens has been having some issues with debt, with closing stores, with actually a lot of theft and crime in their stores. And so there's a lot of questions around that. But it looks like they're still paying their dividend, 25 cents per share. I wonder if that got cut or will get cut at all. Shuttering more locations. Yeah, I'm not seeing anything about a dividend cut. So let's just pretend they're paying 25 cents a share, right? Like that's nearly a 10% dividend yield. That's not bad. This reminds me a little bit of when Silicon Valley Bank was dying and all of the banks were crashing. So I remember seeing this initial crash, and then this crash is actually where I bought a few hundred shares of, I bought Zion Bank. I looked at a few and I decided Zion Bank had the best risk reward on it. And at the time, like the yield on this was like 9% dividend yield, and you can see that they've kept their dividend the entire time. One of the reasons I bought this, there were two banks that during this time, the CEOs of the banks, they're just to show confidence, they bought hundreds of thousands of dollars of shares. It was SoFi and Zion. So I'm like, all right, I'll buy some of that. Not necessarily a great indicator, but it can be one. And sure enough, Zion just ripped back up over 100% up on my position. Been selling covered calls on it, been collecting dividends. It's been awesome. And I've been looking at Walgreens to do the same, but I'm just not as certain on it. And that's why I'm kind of holding off, sitting on the sidelines. But, Unity, gosh, Unity is looking real freaking good at these levels. If we're just let's just pull up real quick. Let's pull up FinViz real quick and just take a look at Unity, right? So the entire, this is what's crazy. The market cap of Unity is 5.7 billion right now. GameStop, this is one of my favorite theories, right? GameStop has a war chest of $4 billion. So let's just say that they came along and decided, hey, we're going to buy out, a sizable chunk of Unity. Now, I don't know if they could. I don't know what the regulations between, a public company buying another public company like that are. But it's interesting to see, and it goes into the idea of like, you get these indie game devs. They make their games using Unity software. They publish them on GameStop, and so GameStop basically becomes the new Steam. That's actually where I think I think there's a strong case for GameStop becoming the new Steam type publisher. So thanks for tuning in, guys. Hit that subscribe button if you haven't already. You saw the trade here that we did for the challenge account update. Again, just in case you missed it, this is exactly what it looks like. We bought to close our put that was expiring this Friday, and then sold to open our put expiring about 40 days from now. Made another $40 on that. So we're not, at this point, the yield's getting a little bit trim, right? So if we're talking like an $1,100 account, $40 divided by 1,100 is a 3.6% return over 40 days. So I'm going to times that by about 10. So it's a 36% return in a year, assuming I could get that every 40 days. So it's not terrible, but not quite as much as I was hoping for. It's all right, though. That's how trading goes. Sometimes you get a bunch of trades in a row that work exactly how you want. Sometimes you don't. In this case, the Children's Place trade didn't work out exactly how I wanted, which is okay. That's to be expected. So what I'm hoping happens here is this pulls back up into about $9 per share, and then I'll let this exercise. I'll start selling covered calls at the $10 strike, or if it just rips to above $10 per share, I'll let that expire worthless, look to something else. Have a great day, everybody. Catch you later.